Now in today's video, we're going to be going through a relatively newer, ultra high yielding ETF that utilizes a specific unique strategy in order to earn a massive amount of income for investors, basically from day one. This investment, along with any other investment, does have some risks involved, but from what I've seen so far since this ETF's inception, if you have the same mindset or similar to what I have on the overall market, this ETF is not only going to have some upside, but also pay well north of a 20% yield from here. So if you're an investor that wants some potential upside, but also wants some more exposure to ETFs that are going to offer some massive income from day one, then make sure to stick around, drop a like down below, and let's get right into this ETF. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the ETF that we're talking about in today's video is ticker symbol ZVOL or ZVOL, or the Volatility Premium Plus ETF. And this ETF used to be ticker symbol ZIVB, which we talked about in previous videos in the past. Now, there have been some slight changes to ZVOL from ZIVB, but from what I see so far, it's more or less still going to be an ETF that's going to short the volatility index, which means that at least if the market stays calm and volatility doesn't spike like crazy, this ETF not only should keep going up in price, but also offer investors like myself massive distributions like it has historically. Now, to dig a little bit deeper into ZVOL so we all understand exactly what this fund is, how it works, etc., it says important information about the fund. This is on the prospectus. It says Volatility Premium Plus ETF, which was formerly known as -1x Short VIX Midterm Futures Strategy ETF Fund, seeks daily investment results before fees and expenses that correspond to 1x the return of the S&P 500 VIX Midterm Futures Inverse Daily Index. So like I mentioned, the volatility index, or the VIX, it basically shoots up and spikes when volatility is rampant throughout the market, or when the market is trading downwards. And as long as nothing crazy is happening in the market, and or if the market's moving upwards, the volatility index stays pretty calm, which means shorting it could be a massive opportunity. Now, this ETF does this on a single day basis, not for any other period. The performance of the index will be the inverse of the daily performance of the S&P 500 VIX Midterm Futures Index, which in turn measures the return of the daily rolling long position in the 4th, 5th, 6th, and 7th month VIX futures contracts. Now, let me make this very clear and not waste anyone else's time. If you, for whatever reason, think that volatility is going to be rampant throughout the market in any given time frame, such as sometime soon, then ZVOL or any product that shorts the volatility index might not be the perfect investment opportunity for you. But for me specifically, the way that I look at it is that most times, at least historically, volatility is pretty much chill. There's been a few times over the last several years where we've seen volatility spike, which products like the one that we're talking about in today's video are going to be at risk. But for the most part, you can see that volatility stays pretty low, spikes up a little bit, and then drops right back down, which means once again, products like these ones could offer some potential massive upside. And at least historically so far, like I mentioned, this one has. Now, to give you some more information about the ETF, as of right now, the distribution rate is 31+%. So like I mentioned earlier, this is going to be considered an ultra high yielder in my book. The net assets are somewhere of around 20 million, so not the largest ETF, but again, these are sort of alternative products that I personally would never make up a large portion of my portfolio, but having some exposure to this, maybe if it's just 10, 20, 30, 40 shares, with my specific risk tolerance definitely makes sense. Because again, long term, I want income, and I want it a lot sooner than what I would get compared to buying into the general markets. Now, this ETF's inception date was 11/22/2024, so again, it's relatively new, at least as far as trading under ZVOL. The expense ratio is 1.35%, which is pricey, but again, this is a very advanced strategy. Now, as far as performance goes, this is what's going to shock you guys, I promise. Since this fund's inception, we're talking 61% since inception. Now, the ETF has only been trading over a specific time frame, which doesn't happen to be that long. But remember, as long as volatility stays somewhat at bay and even trades downwards, ETFs that short it are going to make a ton of money. Now, the distribution details are also very important, especially if you, like myself, are looking to maybe add some shares of this or that to really raise your overall income potential on a monthly basis and do it for relatively cheap and relatively safe. Although, of course, every single ETF comes along with its own risks. Now, the distributions as of so far, and this is since January 26th of this year, have been a steady 48.5 cents per share. And when I share with you guys how much this ETF costs per share, this is going to make even more sense on how much of an opportunity this is in order to get your passive income up substantially. Now, like I said, there's no such thing as a free lunch, and this ETF definitely is on the riskier side of things, in my opinion. But everyone has their own risk tolerance, and for 48.5 cent payout per share, at least for me personally, I definitely added a few shares to my portfolio. Now, as far as the top holdings for ZVOL as of right now, as you guessed it, they're shorting the volatility index over different time frames. The future contracts are being shorted, and there's nothing really else under these holdings as of right now. Different ETFs that utilize a similar strategy like SVOL, they short the volatility index, but also hold different bond ETFs and different products that they also offer. But when it comes to ZVOL, there is basically one exposure, and it's shorting the volatility index, which again, if that's something you don't believe in, then definitely look away. Now, this is what really caught my eye to ZIVB, which is now ZVOL, the Volatility Premium Plus ETF. This ETF, although offers 48.5 cents for every single share that you own per month, at least historically, for an ETF that costs $20 per share more or less, which is insane. On top of that, this ETF since inception, which was around April 17th of last year, the ETF is actually in the green, and in the green by a lot. This ETF has seen 40% price return, and that's not even including those massive payouts. So even if this ETF, in my opinion, traded sideways, even if I bought it at $20 or $21, and for the rest of time, it traded at $20 or $21 and paid me, say, 10, 20, 30% per year in income, I honestly be pretty happy. But the fact that this ETF's total return, because of the price return being so massive, is also massive. This ETF was more or less a must buy for my portfolio, again in a very small portion. Now, lastly, once again, just to look at the total return of ZVOL since inception. The ETF has been trading for around 1.61 years, and this is ZIVB or ZVOL, however you want to look at it. Now, over this time frame, if an investor bought 10K of it and reinvested those massive payouts every single month, they would have turned that 10K into $17,149 over 1.61 years. Now, this is an average annual total return of almost 40% and a total return of 71.5%. Now, even with those not being reinvested, we're still talking 70 and almost 40% return. So either way, ZVOL, at least historically speaking, because of the way the volatility index has sort of been chilled out for the most part. Although again, in the last year, we did see a massive spike, and this is back on August 5th. We did see a massive spike, and ZVOL definitely felt some pain from this. But overall, at least since this ETF's inception and because of the way the market has cooperated so far, again, so far being the key here because we do not know what's going to happen in the future, and if volatility spikes, funds like these are going to be in trouble. I cannot tell you guys that enough. But at least so far, this ETF has been able to pay massive distributions to investors like myself, which I've been earning now for several months because I do hold shares of this one. But also, as far as price return goes, it's very rare to find ultra high yielders that on the max time frame aren't trading down and to the right. So for the reasons that ZVOL, at least since inception, has been trading consistently up and to the right over the past 1.6 years and has been paying investors 48.5 cents for every single share, which again costs around $21 per share as of right now. This ETF is definitely one of my favorites when it comes to ultra high yielding game, which I, for the most part, like you guys know, stay away from. But if I were to pick one of my favorite ultra high yielders that I specifically believe in, and this is only because I think the volatility next to VIX is going to stay somewhat chill over the next year or so. I don't know what's going to happen beyond then, but at least with everything going on in the market right now, I think volatility is sort of going to be at bay. I definitely would consider adding more ZVOL to my portfolio because of the strategy that I specifically believe in, and because of the past performance, which of course does not indicate future performance, but it gives us something to go off of. So now that we talked about ZVOL, one of my favorite ultra high yielders, the ETF that shorts the volatility index, and that has done it pretty successfully so far, I lastly, most importantly, want to hear from you guys down below. Is ZVOL or any other ETF that utilizes a short volatility index position something that you guys would add to your portfolio? Let me know yes or no in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.